wait for the extra microphone. Well, good morning, everybody. Thank you for joining us. You may know me from What's the Problem, so thank you for the people who have watched it and shared it with others. It helps anybody with any background get to the starting line to understand why Bitcoin is important and why we're all here today. Now, getting to the starting line with Bitcoin, once you're there, the first step is how do you actually buy it? And even after 16 years, Bitcoin is still young, and buying it can be a complex topic when you first arrive in the space. And so this panel today is hopefully going to demystify some of the routes that you have to buy Bitcoin, understand the trade-offs between sovereignty, ease, and associated risk. And the four guys we have with us today each come from slightly different backgrounds, with different experiences, and hopefully over the course of this session, we'll be able to help everyone and have a mental map of the options available to them, the risks and the trade-offs, and then ultimately you'll have a better idea of how to get started in a route that makes sense for you, and then potentially where you can move on to as you become more confident in your journey with Bitcoin. And so I'd invite each of the guys in turn to sort of spend 30, 60 seconds just introducing themselves, giving a slight insight into where they're coming from in the discussion, and then we'll jump in with some questions and a further discussion. So, Adem, do you want to kick us off?
Sure, thanks, Joe. I'm Adem Bilican, co-founder and CTO at Relay, where we provide a very simple on-off ramp to Bitcoin. So a mobile app for retail customers where they can easily buy and sell Bitcoin in all of Europe. That's me.
Good morning, everyone. My name is Jan. I'm from Hacken Lives. The thing what I'm taking care of is like full sovereignty. So I'm trying to empower everyone to be full sovereign. I'm a huge advocate for non-KYC approach. I'm trying to help people with a global mobility, so not being locked in one jurisdiction across the globe and having the multiple opportunities in the global scale. So I will be more advocating today for non-KYC Bitcoin because that's kind of my approach and I like it.
Yeah, hello, Piotr from Xapo Bank here. And Xapo Bank has basically been in the space ever since 2013. Our main target customers are high net worth individual Bitcoiners. And because we've been in the space, lots of our customers, got into Bitcoin early. So now they're sitting on millions of dollars worth of Bitcoin, and we provide the banking experience for them. It's fully KYC. It's under our custody, but we give them as superpowers, so they can spend their Bitcoin, send their Bitcoin, transact. They can borrow against Bitcoin. That's our latest addition, and we have some yield products as well coming up there.
Hi everybody, my name is Raimund. I am the head of business and wealth at Coinfinity. We are the oldest Bitcoin broker in Austria and maybe also one of the oldest in Europe. We are around since 2014 and happy to share my insights today at this panel and look forward for a nice introduction and discussion.
Okay, super. And so Adem, let's kick off. How do you think about the trade-offs between ease of access to buying Bitcoin and the level of sovereignty you have when you first get going? Because there's really a spectrum here that goes from fully self-sovereign, peer-to-peer, cash transactions, no KYC, all the way through to fully regulated, fully KYC, connected to the banking sector, fully doxed. And so tell me how you think about the trade-offs in those areas.
Yeah, sure. At Relay, we are somewhere in the middle. So we require users to do KYC, but we offer a fully non-custodial wallet. So it means that when you install the app, a wallet is created and the users have full control over their wallet. So the private keys never leave the phone. The only thing we need is the public address to send the Bitcoin to the user, but that's it. So when we started no KYC, non-custodial. That's one extreme, and then there is the other extreme with fully custodial and fully KYC. So we are in between for various reasons, mostly for user experience and for regulatory reasons, because we are targeting retail customers and we want to make sure we can offer them the easiest onboarding to the Bitcoin standard so they can very simply install the app, buy and sell Bitcoin. So it's not like an exchange. You don't have complicated limit orders, market orders. You just tell us how much worth of Bitcoin you want to buy, 50 euros, 100 euros, whatever. You send the money, it's exchanged to Bitcoin and sent to your wallet it's always a wallet that you control. There is no custody at all. You can also integrate any external hardware wallet if you want to. A Bitbox, a Ledger, you just connect it and you will receive your Bitcoin there. So that's what we offer at Relay.
Okay, great. And Jan, from your perspective, this is obviously further along the lack of sovereignty route to initially, and then the on-ramp is coming from Relay into and going to a non-custodial wallet. But from your perspective, different parts of the world have different levels of access to systems like this. So do you want to give us a bit of insight into your experience with people onboarding into buying Bitcoin for the first time in different ways?
Yeah, like what I agree with, definitely like self-custody is the way, because like we say all the time, not your keys, not your coins. So that definitely should work this way because you are your bank, like you basically said. There is more responsibility on our side as a self-custodians ourselves, but we are 100% in full control of the Bitcoin. And obviously, I still think that there are ways to get your Bitcoin without a KYC, because these ways exist. Obviously, there are some trade-offs in terms of, let's say, time invested in getting Bitcoin non-KYC. But I'll give you a couple of options what we can work with. So first one is like conference. We are here today. So you can meet thousands of fellow Bitcoiners, then grab a beer and say, hey, let's do quick peer-to-peer exchange. And one side got cash, and the other side one got Bitcoin. So you can buy Bitcoin like within a couple of minutes and have a beer. So meetups, conferences, it's awesome. So it's simple. You make friends, you make connections, and you do peer-to-peer. Second option, like we can see our ATMs, and still if we don't hit like 1,000 euros limit, so we still can go without KYC. I think somebody might see there is a booth from 21 World there. They got it's called Bleskomat. So that's a kind of like a small machine looking a little bit like ATM, but tiny one. There is no KYC whatever, so it depends just on a channel liquidity, and you can just pump cash inside and buy Bitcoin, no KYC. Vexel from Satoshi Labs, marketplace peer-to-peer between fellow Bitcoiners. You just find your counterparty and you get your Bitcoin, no matter the amount. Okay, yeah, I want to buy 3 Bitcoins. Yeah, cool, you'll probably find somebody on the marketplace selling 3 Bitcoins. So you got options to buy Bitcoin without KYC, plus you can self-custody it.
Okay, perfect. And Piotr, noting what you said about Xapo Bank catering to the sort of perhaps more advanced, earlier adopters for Bitcoin who are thinking about managing securely larger portions of Bitcoin holdings in a more structured way. For you personally, how do you think about buying Bitcoin? How do you go about executing that? And how do you think about the trade-offs that the guys have talked about so far?
Yeah, so because we are managing, our customers are on the high net worth individual end, so they got into Bitcoin early. And as they went through the evolution along the time, they started thinking more and more about security of their holdings, because it feels very different when you have $100, $1,000 of worth of Bitcoin versus $1 million. All of a sudden, you start thinking like, how do I secure this better? And also some of those people, they don't want to cash out. They want to borrow against Bitcoin. They want to do something more with that Bitcoin. They want to use some of that Bitcoin to earn yield. So because of that, they require more care. And also what we have seen from our conversations with our members, our customers, is that they require some high touch there. So they have a private banking experience, someone, not AI, not the bot, but some person on the other side of the fence is always available for them to discuss, to help them, etc., to guide them as well. Now, in terms of security, because the security becomes all of a sudden very important, because it's the honeypot and we cannot afford to take any risks, any single point of failures, we've actually had this famous setup where we had a Swiss bunker, and in the Swiss bunker, it was really like James Bond movie style, where actually we are flying in customers from time to time to show them the bunker. It's, of course, in an undisclosed location, but you basically go to the bunker out under the mountain, and then you have room after room after room with advanced security, biometric checks everywhere, people with guns, you have Faraday cage when inside the Faraday. It's really James Bond style. So we see that it's for our customers, it's not only buying Bitcoin, but also securing that right away. And if you're buying on exchange, the best way you can get the best price, raise the fees, but then you need to think about how to secure it. You shouldn't be leaving that Bitcoin on an exchange. And just adding on that note, recently we started offering our members very good spreads and fees on the trades. So right now we are offering 10 bips, so 0.1% on every trade. And people really do love it, because if you're buying like $1,000 worth of Bitcoin, they may not make such a difference, what's the fee, but the moment you start buying, 100K or more, those fees very quickly add up, and all of a sudden, it really matters if that fee is. So we are super happy to have it, and members' feedback was overwhelmingly positive there.
Okay, that's great. I imagine you don't get many beginners going straight to Xapo. It's more something you move towards gradually over time, especially with the James Bond style security.
Yeah.
That is not a prerequisite for storing Bitcoin. It's just where ultimately you hope to be, I guess. And so Raimund, from your perspective, you work with people, helping them get set up and onboarding and buying Bitcoin for the first time. Now, can you just tell us a bit more about the routes that you tend to send people down when doing that, and some of the things you encourage them to think about?
Sure. Maybe before I talk about it, one question to the audience. Who actually is holding Bitcoin from you guys? And who has no Bitcoin whatsoever? Okay, very few people. It's a very interesting and very easy way to buy Bitcoin through us. As a Bitcoin broker sitting in Austria, we have to, first of all, fulfill the regulatory framework from the authority, but we do this in a very well streamlined way. When you go to our website or when you go to our app, you can actually buy Bitcoin by simply pressing the button buy. Of course, you have to register. Of course, you need an account. Of course, you have to declare your identity, right? That's maybe the opposite from peer-to-peer, as Jan was pointing it out. But we are very good at keeping things simple. First of all, we are very good in educating people, give them information. So everything we do is very well transparent, and everybody sees how it works. But the onboarding process, to come to your question, from a natural person, from an individual, goes very, very fast. So we're talking about maybe a few minutes whatsoever. Interesting thing is companies and juristic persons. When a company or a juristic person comes to us and say they want to put Bitcoin on a balance sheet, they run through the onboarding process in a very streamlined way. But of course, they have to distribute documents, right? So from a company, we need the ultimate beneficial owners, commercial register extract, and so on. But as I said, we're very good in organizing and structuring the process. We're very transparent, so particularly companies know exactly where they are in the onboarding process, and they're very fast. I think the fastest onboarding from a juristic person was 12 hours. So from first contacting us until the first purchasing Bitcoin was 12 hours. So it's very fast, particularly for juristic persons. So I think when it comes to buying Bitcoin, it's important to keep it simple. I think there is not the right answer, KYC and non-KYC, and this is the only way, and this is the only thing. It depends on your infrastructure. It depends on your business model. And we support, of course, individuals and companies who want to buy and sell Bitcoin through our services.
Yeah, I just wanted to build on Raimund's point. So I think at Xapo Bank, we've always were telling our customers that when you're getting into Bitcoin, you need to consider at least, it's also the mindset thing, you need to consider at least 4-year holding period. You should not be trying to trade this. You should not be trying to, time the market, make a profit. Bitcoin is a long-term play, so you should be thinking about 4 years, 5 years, 10 years, because that's the horizon that will allow you to survive. Now, there will be a crypto winter. We know right now we have a bull market, 100K, etc. So everybody's happy. But at some point, there will be a crash in the market, the drawdown in the price. And you need to make sure that by then you developed a conviction that this is the best asset you possibly could hold. You've been orange pilled enough, so you will have those, diamond hands not to sell. Because we've seen many people, especially early when they are starting out and they don't have conviction yet, they just buying in, and then there is a problem, and then price crashes 30%. They sell at the loss, and then, fast forward 4 years later, they regret selling this asset. Or sometimes you see people, doubling of Bitcoin and then looking at other coins, other, meme coins or what have you, instead of really diving deep into Bitcoin, why Bitcoin is what problem is Bitcoin solving, why am I holding it, what's the promise of Bitcoin, because that will allow you to basically keep accumulating more and stacking sats.
Yeah, so process to buy Bitcoin is part of it, but also building your conviction as to why you're buying Bitcoin is equally important. One of the things that I try to say to people is that you should trust your gut. It's only you know how you react to the price changing. If Bitcoin drops 20% in a few seconds, are you worried or are you happy? That is a good test as to whether you are owning Bitcoin for the right fundamental reasons, but that level of conviction builds over time. Because if you know why you're buying it, you know you're going to be buying it forever, and you know there's only a certain amount of it, so the price going down is a good thing. And so if you're lying awake at night worrying you've got too much Bitcoin, then you've got too much Bitcoin for your level of conviction at that point in time. You'll get to a point where you're lying in bed at night worrying you've got too much fiat, which is also, the other side of the coin. So you have to trust your own gut here, and it's different for everybody. It's different for everybody, but I would certainly not encourage people to launch into trying to buy as much Bitcoin as possible, because if the price drops, you'll panic and sell it, or if it goes up, you'll sell it, and you'll end up with more fiat, and you'll have just made your problem worse. And so over the long run, you should be trying to hold it, DCA into it over a period of time that makes sense for your finances. So that's a very good point. Thank you, Piotr. Now, Jan, I'm, from a personal perspective here, and I suspect I'd be interested actually, a show of hands. Has anyone ever bought Bitcoin peer-to-peer or in cash? Okay, so way less than half. And I must admit, I've never bought it peer-to-peer, and I've never bought it in cash. So I'm really interested to better understand, before we dig into the benefits of KYC versus non-KYC, just from a practical and execution point of view, can you just give us a bit of color as to what that's like, and to think about the risks and the trade-offs? Because I think a lot of us who are coming from, we are ultimately coming from the fiat world at one point, but you come from an area of safety, of barriers, of processes, to then think about moving into buying an asset where you're meeting somebody potentially you don't know, or you're trading with somebody you don't know, there's no safety net in the background. Just how to go about that process and some of the risks and trade-offs.
Yeah, so let's follow up on those couple of options of non-KYC that I mentioned previously. So if I take ATM, so you don't carry any risk, like you just pump cash in the ATM and you got a Bitcoin on your address. So no counterparty risk, basically. If you do the same with Bleskomat, which is like non-regulated version, even that, so there is no limit. You pump cash inside of the machine and you got a big BTC, no counterparty risk. If we now get into the peer-to-peer, like a person-to-person cash transactions, so I think there are a couple of steps you can do. First of all, we mentioned we got a BTC Prague conference, awesome option to grab a beer with somebody and say, look, here are, I don't know, $2,000, and I want BTC for $2,000. The probability that somebody's gonna smash you on your head with a wrench is pretty low, because nobody's gonna probably leave the premises without catching them. So Bitcoin conferences are totally fine and safe. And I think you are right now aiming to, let's say, that kind of Vexel peer-to-peer meeting with a stranger. And in those cases, still there are multiple options, because what I like about, guys, have you heard about Vexel app, by the way? Bro, yeah, so who haven't heard about it, it's on the Satoshi Labs there, Vexel. So it's a marketplace where you can get connected with other people, but what happens is that it's based on your social graph. So you got your phone number, and it can go like through like secondary contacts to some contacts you might know directly, but let's say through your friend. So the thing is, I find some offer on the market from people I don't know, and I can see that you are the connecting dot between us. So, okay, I know Joe. Cool, so let me call Joe and ask about that person. So you can give me good, bad reference, whatever, so I can do like a pre-screening in that.
Yeah.
So if I don't feel it's cool, so I don't do that deal. Another kind of like, I'll give you another tip is like, we agree we are gonna do Vexel at 10 a.m. We are gonna go to the cafe where are a lot of people, and it's gonna be like 10 grand. And then you are going to be, hey, look, can we change the place and let's meet somewhere else? And by the way, I'm going to take a friend of mine with me. In that case, I'm canceling that transaction. I'm not going. Yep. It doesn't worth the risk. So we agreed on something. Another thing is you go small. Okay, let's catch up for the first time and let's do, $1 grand. And okay, so let's see how it goes. We maybe chat, we are gonna have 1-2 beers. Hey, can we catch up in a month? Yeah, sure, I'm around, and we already know each other. So you have to build the trust. Mm-hmm. But when you build in a trust, there is no limit. And what I like the most is there are no data, and there's nothing that can leak. So from the privacy perspective, it's 100%. From the security perspective, yeah, you are on a scale somewhere. Well, you can do a lot of like countermeasures and OPSEC prep to make it simple and okay.
Yeah, well, unfortunately, we're in a world now where you have to take those trade-off risks in order to buy Bitcoin without that trace of it, without having to go through the banking sector in those ways. Ultimately, you still need to touch the banking sector to get the cash out, which is increasingly difficult. And so, the way that you describe that is wonderful for the people who then prioritize privacy and security on day one. It may sound quite frictionful for beginners or quite scary, potentially, especially for maybe women who want to buy Bitcoin and trying to find somebody, and it's mainly men who are the primary holders right now, as you can probably tell by the sex imbalance at the conference. And so, it probably leads us nicely into thinking about why that's the case. Right? Because really, everyone should be able to access Bitcoin. They should be able to buy Bitcoin without having to get anybody's permission to buy Bitcoin. And so we now live in a world of KYC versus non-KYC. And ultimately, Bitcoin itself is peer-to-peer electronic cash, and no one can stop you. But acquiring Bitcoin requires an integration to some degree with the fiat banking system, because you have to buy it off somebody else. And so maybe, Adam, you can talk us a little bit more around Relay's journey from non-KYC to KYC and what you've learned along the way and what that then means for customer experience. Because, it's quite different, I think, being in the regulated world as a Bitcoin company versus being in the regulated world and how you experience dealing with your bank, who doesn't understand why you want to own Bitcoin, but a Bitcoin company really wants you to own Bitcoin and take self-sovereignty of it. So can you just fill in some of the gaps for us there?
Yeah, sure. The graph feature is pretty cool, actually. I don't know about this. That's very helpful. So there are 3 points, I think, where we are competitive and we can bring a lot of value to the users. In the end, you have to pay for that Bitcoin. It's up to you what's the price you want to pay. It's not only financial. So the 3 aspects where I think KYC is helping us, it's a lot of responsibility for us as well. The biggest risk with a KYC platform would be your personal data being leaked or going out and being used for malicious purposes. That is the biggest risk. The counterparty, what we can offer thanks to KYC, are like 3 points. The first one is a very competitive fee. Obviously, when you go to P2P marketplaces or the ATMs, I can give the example in Switzerland, you pay a 7% fee. There is a bit of a premium, not every platform, but it's fine, and you have to accept to pay a bit of a premium if you go P2P. That's the price for extra privacy. The second one is convenience. Maybe convenience is the first one, actually, for most of the users, but not that I'm recommending anyone to be a couch potato, but from wherever you see it, you can just click a button, and buy your Bitcoin. You literally don't have to move. You should. Physical activity is very important, but like also other features like DCA. You mentioned DCA. You can just set up a DCA weekly or monthly, and you don't need to worry about it. So you don't need to look for the right place or the right person to be able to fulfill your order. So convenience and features are the thing that we can, the options that we can provide to our users thanks to KYC, let's call it. So there is a counterparty, but you have to pay a given price. You have to pick which price you're ready to pay for.
And within KYC itself, you have a framework that you need to follow, but you can also try and make it easy and as most pain-free as possible, given compliance with the regulations from a Bitcoin perspective. And I guess you also have the same issues onboarding businesses as well as customers. So how do you think that how do you think businesses are reacting to the level of KYC that you're having to put them through relative to the financial institutions that they're typically dealing with? And do you see a material improvement?
There is a big understanding, because you have to imagine that when companies approaching us, we're talking about SMEs, small and medium-sized enterprises. Yeah. And enterprises in general are starting buying Bitcoin, and they're starting buying Bitcoin heavily since 2024. This is just some key message that I just wanted to point out today, because I think it's important that you guys also know that, right? Also firsthand. But those companies, they of course accept and actually are eager to go through this process. We try to put the KYC process at the end of the whole onboarding process. So we try to streamline the process in a way that is very convenient, time efficient, and very individual and personally monitored through us. So these are services and the process that we are offering, it is very well appreciated by companies. So they accept the level of evaluation. It's also necessary, because you have to imagine when they are putting Bitcoin on a balance sheet, and an auditor is taking a look at it. You have to have a clear professional structure in your balance, and you have to know how you are going to display Bitcoin in a balance sheet and so on. And the other thing is that we are taking care very individually and very personally. We're taking care of our clients very, very, very individually. So we are taking care of every single question they have. And there is not like a bot or artificial intelligence who is corresponding with them. That's us. That's me, for example, who are answering questions when it comes to documents they have, for example, to transfer. And the whole process is very, very slim, and as I said, very time efficient. And this is why companies are appreciating also the process that we have implemented. Okay,
thank you very much. And it's worth touching on here, because I think the talk is framed more about the individuals buying Bitcoin. But we've seen over the last, Michael Saylor's been doing it for a few years now, but over the last few months, we've seen the likes of MetaPlanet and Smarter Web Company in the UK and various others, publicly listed companies buying Bitcoin onto their own balance sheet. But what's been very clear to me over the last few months is, as these things have been going on in the public sphere, more and more privately owned businesses, small, medium enterprises across certainly the UK I'm familiar with, and evidently across Europe, are also starting to buy Bitcoin for their own treasuries. And Bitcoiners as a whole, they tend to over-index in being productive people, open-minded, entrepreneurial people. And so as a community, compared to the rest of the population, we own more businesses proportionally. And so many of you sat there today probably have businesses yourself, and you should be thinking about whether it makes sense from a business perspective to also start thinking about acquiring Bitcoin in a strategic way over time as a way of giving yourself competitive advantage for the long run and ensuring that your business has the ability to live forever and outcompete your fiat competitors. Now, Piotr, Xapo Bank is clearly on the experienced end, but when people are just starting to get into Bitcoin, if they go and Google Bitcoin, how do I buy Bitcoin? They're probably going to be presented with a range of options, not all of which would be perhaps recommended by people on this stage. So how would you think about giving people an overview about what types of companies to look for, what types of companies to avoid when it comes to accessing exchanges or brokers or apps, and what sort of characteristics should they be watching out for?
Yeah, so definitely we need to watch out for unregulated companies, exchanges that are unregulated with unknown jurisdictions or with some potential funny business going on. As Xapo Bank, we've been regulated in Gibraltar, and we are a fully licensed bank. And unlike, for example, JP Morgan all of a sudden deciding to do Bitcoin, we've been Bitcoiner company from the very beginning. We've been founded by Wences, and then we've been a Bitcoin company from the very beginning, and only now we became a fully regulated bank. Now, because we are a fully regulated bank, that means full KYC. But that also means that, right now, we are onboarding corporates. We also need to do a KYC, KYB there. And, blockchain is public, right? Every transaction is visible. Everyone can see that. And so as we go to the institutional stage right now, there is more and more regulatory scrutiny around where the funds are actually coming from and have they been used for nefarious, illicit purposes, for terrorist financing, etc. And we cannot just allow to use our products and service in a way that would be, violating our terms of service or, used for terrorist financing, what have you. So that's why also with full KYC, it's very easy to offer product on top for a Bitcoiner, which is, for example, debit card that works everywhere. MasterCard and Visa can give you a credit card or debit card, but of course you need to have KYC because otherwise they wouldn't allow you to do that. The same with loans. If you want to borrow against Bitcoin, all those services, we are looking where the Bitcoin is coming from. We are working with chain analysis to see it on the blockchain and the history of transaction, etc. So this basically provides a safe environment where we can see that those coins are clean, right? They've not been tainted in the past. And this provides a peace of mind for our customers and also peace of mind for our regulators, because as a fully fledged bank, we are audited every quarter. We have people looking at us, going and checking every part of our company. If we are, and banks, we have a very high strict requirements they need to adhere to. So I would say it's a trade-off. But at Xapo Bank, we always thought that yes, we want a world where Bitcoin is the base layer of the new financial system, but there is no way we're going to get there tomorrow. We will probably get there 10 years from now, 20 years from now, and meanwhile, we need the companies that will bridge that gap between the Bitcoin world and the traditional finance world. And that's where KYB, KYC is a thing that you cannot just skip.
Okay. And Adam, from your perspective, you guys only allow people to buy one thing. And that's Bitcoin.
Yeah.
Now, when you're first looking at buying routes to buy Bitcoin, you may end up finding regulated entities that also sell a billion other coins. Now, what sort of advice and how would you think about sharing maybe some of the things that you've seen in the past, and where would you point people towards, in a structured way?
Yeah, for us, it's obvious, right? It's been a USP from the beginning, Bitcoin only, Swiss-made, self-custodial. These things never changed. The only thing we had to change was KYC. We are Bitcoiner at the core. So we will only offer Bitcoin self-custodial through the Relay app. The problem is now, Bitcoin is a bit like, you check other platforms, users are a bit worried, they want to buy a cheaper Bitcoin, they find this other Bitcoin that is cheaper, and that's what they want to go for. So education is very, very important on both ways. First, overall in Bitcoin, and then non-custodial as well. We know that it's a lot of responsibility for the users. We had this a few times, they have 12 words, it's in English, they don't speak English, they don't know why they have 12 words, where is it coming from? I'm used to an email and the password. Yeah. So we have a lot of challenges when it comes to UX. Education is part of it. So we have 21 newsletters. We educate about Bitcoin, how it is mined, where is this Bitcoin coming from, what it means to be self-custodial. So there is a lot of educational responsibility, I think, on all of us that we need to do. Make sure that they understand the difference, Bitcoin versus the others, and why it's important.
Yeah, it is a challenge when you first get going because Bitcoin is a multi-headed hydra, and it's capped in supply, which is often the headline, but it's the self-custodial nature which is the real beauty under the hood. Is like you own the money, no one can take it off you, but it's also quite challenging. It's also quite challenging, and so when you're buying Bitcoin for the first time, whether it be on an exchange or an app, many people buy it in a custodial way because the barrier to comfort and security in taking self-custody is a bit of a step, especially for people because they see the cap, they hear about Bitcoin, they're not buying it necessarily because the pennies dropped about the self-custodial nature of it. And so, it's different routes for different folks. But I would encourage everybody here, if you are thinking about buying Bitcoin, use a Bitcoin-only company. If you use a company that sells lots of other coins, they will try and sell you lots of other coins. And I would imagine many of us on the panel today have wasted many months, years spending time looking at other things in the past, only to realize Bitcoin is actually the only thing that matters. And so, it's nice to be able to share those pains with other people and try and spare them that route. Piotr?
Yeah, I just wanted to say, if you're considering, for example, different custodians or wallets, self-custodial, look at people behind those companies, behind those wallets. Are they Bitcoiners? Are they orange-pilled? You can see their social media, right? Everybody's like, so look if they have deep conviction in what they're doing, because they need to have a skin in the game in this.
Absolutely, and if in doubt, speak to somebody you trust, who is more of a Bitcoiner than you, and ask for some direction. There are lots of people out there who will try and take advantage of you, but Bitcoin as a community is low ego, high integrity, always willing to help other people along the journey because it's not about making the money, it's about fixing the money. And so I would ask, we've got a minute left, guys, 15 seconds each. What's your key takeaway for, how to get people started if they were to remember one thing?
Do your own research. As Piotr said, make sure it's Bitcoin only, that's for sure. And for the rest, decide on the price you want to pay to get your Bitcoin on a self-custodial wallet.
I would say that nothing's for free. You need to put your time in education to be able to be fully self-sovereign. It cannot go from one day to another. It's going to take some time to be fully sovereign, but this is the way to do it. Otherwise, you're going to be always relying on someone, which is a downside. You want to be full sovereign, fully private. You want to own your data. You don't want to be scared about leaks and so on. So invest your time into learning and studying.
Yeah, I absolutely second that. The education is key. I mean, you need to know what you're buying into, and so we never tell people buy Bitcoin because there will be financial advice. We say study Bitcoin. Talk to Bitcoiners, read Bitcoiner books, like study history of money, look at Fed was doing, like all this stuff. Become orange-pilled because that will allow you to hodl.
My advice is do not make any compromises on self-sovereignty. Choose your partner also based on that attribute. That's my point.
Okay, great. And I would say just trust your gut and talk to people. Do your own research. All right, thank you, everybody.
Thank you.
Secure your BTC Prague 2026 ticket at the lowest possible price now.